Hey, we got a special report. We're going to be doing a lot more of these one-on-one interviews so that we can actually capture the news as it happens. And in this case, I read a really interesting report in Yahoo News from and cited our good friend Michelle Krebs, who's an executive analyst with Cox Automotive and the parent company of Kelly Blue Book. And Autotrader as well, I believe, right? Yeah.
Yes,
So the report, although she said the headline might be a bit exaggerated, at least car prices seem to be moderating. Would that be safe to say?
that is safe to say. We saw these massive increases after COVID with the chip shortage, and we are now seeing them moderate. For example, in July, we saw prices only up like 0.4% over the previous month. And that was like the smallest increase we've seen in over a decade.
So, a couple of the reasons cited. One was that inventories have increased in general, but more importantly, EV prices have fallen dramatically, I guess would be safe to say, right?
Yes, so let's start with the EV prices. Tesla, of course, is fighting to maintain market share, which it's dominant in the market. And so it has been slashing prices, especially as EV share is kind of plateaued right now. And there's a lot of new competitors in the space. So they're protecting their ranks, and they have been slashing prices in the US and China, all over the place. So and then everybody follows suit. So that has been a huge factor. About a year ago, or sometime in 2022, the average price of an EV was $66,000. We're now down to $52,000. Some of that's because there's new players that are less expensive, but also a big share of it is due to price cuts.
Wow. And then, of course, interest rates on new car loans are quite significantly different, like doubled essentially, what, over the last year or so, right?
Right. The average new car loan has at least 9% interest rate on it. So that while the prices are coming down, the consumer may not feel it because the interest rates are high, and that keeps the car loan payment up. But as you mentioned earlier, too, inventory is up. So we are about 2 million vehicles on the ground every month. That's up from less than a million in some months last year, still way off 2019 levels when it was 3 to 4 million. But that there's been a little bit of buildup of inventory, especially for certain brands and certain models. And so we're seeing bigger discounting. We're seeing more incentives. We're seeing more discounting. A year ago, people were paying over list price. That's not the case anymore. They're paying list. And in some case, we're hearing of paying under list again.
I was looking at one story where the mid-engine Corvette is very popular, and already it's like a little under $100,000 or something in that ballpark. And that this particular listing was like $20,000 over manufacturer's suggested retail price. So what is shortage of these mid-engines, or just the rich people who don't care how much money they spend? I'm trying to figure it out. So,
well, it's a popular vehicle, although I recently read that General Motors is trying desperately not to let that happen. They want people to just pay the list price. They have some kind of documents that buyers have to sign that say they won't flip it for more than they paid for it. I don't know how they can enforce that, but that is a concern of the automakers too.
all right. So, anything else that we should take note of that you've noticed here in the first 6 months of the year?
Well, it was a surprisingly strong period of time, stronger than we anticipated. We're just stunned at how resilient the consumer is, especially because of higher interest rates. The second half is a little iffier. We may be seeing a little bit of slowdown in the growth. We'll know this week when the August sales come out and when the quarterly sales come out. We anticipate a little bit softer fourth quarter. The other thing that's a wild card here is we're facing a possible UAW strike. We don't know against who, or more than who. They're threatening to strike all three. I think that's unlikely, And then, of course, Unifor over in Canada just announced its target is Ford. So we'll see what happens, but that could have a big impact on inventories.
I'm actually hearing in the U.S. it might be Stellantis. I'm not sure, but that's what I've been hearing in the rumor mill.
I think Stellantis is the best bet. I don't think that they'll do all three because that would really drain the strike fund. And I think because they picked Ford in Canada, they wouldn't pick Ford in the US. I've always thought it was between Stellantis and GM, and it sure seems like Stellantis.
Yeah. Used car prices. No, actually, I think they're going back up again, aren't they?
Yes. Well, we are seeing very strong used car prices. Used car sales are hot, and inventories are very low, and so that makes prices high. And we are not going to see a change in that because a lot of people are frozen out of the new car market, so they turn to the used car market, and the supply is just not there because we didn't sell huge amounts of new cars, during COVID and the chip shortage. We didn't do much leasing at all, which is a big source of that. And then, of course, rental car companies were in the market buying used cars instead of putting their cars out there. So we see a shortage of used cars, especially the later model ones for the next few years, which we anticipate will keep prices high for used cars.